When comparing UPS and FedEx, examining the various financial ratios that are available can help us better identify the two companies' comparative strengths and weaknesses. One of the first group of ratios we can look at is the company's growth ratios. Starting with revenue growth, and UPS held a 3-year average of 17.8% compared to FedEx's 3-year average of 36.2%. This shows that FedEx has been able to grow their revenue more rapidly compared to UPS. Next, we can look at total asset turnover growth, and UPS had a 3-year average of 14% compared to FedEx's 3-year average of 48.86%. This again shows that FedEx is better at generating growth with their total asset turnover. Next, we can look at operating income growth, and we'll find that UPS had a 3-year average of 35.9% compared to FedEx's 3-year average of negative 6.52%. And lastly, we can look at the two companies' net income growths, which UPS held a 45.1% 3-year average compared to FedEx's negative 11.32%. The next group of ratios we can look at is asset efficiency ratios. And these group of ratios will help us better compare how well the companies are using their assets or managing them. And the first one we can look at is working capital turnover, which UPS had a 3-year average of 18.17 compared to FedEx's 3-year average of 9.32. And working capital turnover shows you the amount of revenue generated for every $1 of working capital. So the higher the number, the better. Next, we can look at property, plant, and equipment turnover, which UPS had a 3-year average of 3.17 compared to FedEx's 3-year average of 2.33%. And this shows you the amount of revenue generated for every $1 of property, plant, and equipment, which again, a higher number is better. Next, we can look at capital expenditure percentages, and you'll find that UPS had a 3-year average of 3.9% compared to FedEx's 8.2%. This shows you the amount of capital expenditures that have to be expended for every $1 of revenue. So it's actually better to have this percentage lower than higher. Lastly, we can look at total asset turnover, which UPS had a 3-year average of 1.57 compared to FedEx's 1.33. This shows you the amount of revenue generated for every $1 of total assets. So it's actually better off to have a higher total asset turnover than lower. The next group of financial ratios we can examine is profitability ratios, with the first being operating margin, which shows you the amount of EBIT that's created for every $1 of revenue, which UPS had a 3-year average operating margin of 11.67% compared to FedEx's 3-year average of 7.44%. Next, we can look at net profit margin, which UPS had a 3-year average of 7% compared to FedEx's 4.48%. And this ratio shows you the amount of net income that's created for every $1 of revenue. Next, we can look at return on assets, which tells you the return on assets, which UPS had a 3-year average of 12.33% and FedEx had a 3-year average of 6.44%. And this ROA was calculated by taking the net income plus the interest expense and dividing it by total assets. Next, we can look at ROE, which tells you the return on equity. And UPS had a 3-year average of 134% compared to FedEx's 3-year average of 12.61%. And this ROE was calculated using the net income divided by shareholder equity. It's also important to mention that UPS has considerably less equity compared to FedEx does, and that's also alluded to before in their liquidity ratios, which shows that they're more leveraged than FedEx is. The last ratio we can look at is economic value added, which basically shows you a financial amount of value that's added to the company, which takes into consideration the cost of capital and the required return. Which UPS at a 3-year average of 2,687 million compared to FedEx's 3-year average of 352 million. This shows that UPS is far better at generating profit. We can do a quick review of all the summaries, starting with the growth summaries, which FedEx had a better revenue growth and total asset turnover growth ratios than UPS did, and UPS had better operating income growth and net income growth than FedEx did. But it's important to note that these ratios might not show the respective positions of the actual underlying ratios. So you can have negative net income, and just that percentage can start growing, and you can have a higher growth ratio than somebody with positive net income, but they might have less growth. So next we can look at asset efficiency, which UPS was more efficient with their assets than FedEx was in every category, which was working capital turnover, property, plant, and equipment turnover, capital expenditures, and total asset turnover. Next we can look at the liquidity, and FedEx was actually more liquid than UPS was. But it's also important to note that later on we'll see that maybe they might need to be more leveraged than they are now. So moving on to profitability. UPS was better in all the profitability measures than FedEx was, considerably too. So that goes back to the argument that maybe FedEx needs to start using more leverage than they are now. And then we can also look at the two companies' balance sheets. And UPS has total shareholder equity of $2,491 million compared to FedEx's $1,993 of shareholder equity, which is drastically higher than UPS's. So it's also curious to note that FedEx has a higher earnings per share than UPS does, even though they have more equity outstanding. And they've also had a negative return, which was 13.71% in 2016, but UPS also had a negative return of negative 10.81% in 2016. FedEx actually has a little bit higher beta, which is 1.69, and UPS has a lower beta of 1.21. Neither one of them satisfied the required return, obviously, for 2016, but on average, for the past 3 years, UPS actually managed to meet the required return, which I calculated was 11.77%, and they had a return of 12.04 for the past 3 years, despite the negative 10.81% in 2016. And the required return that I calculated for FedEx was 15.83%, and for the past 3 years, they've created a return on average of negative 13.38%. So, in short, I would consider UPS a more desirable buy than